Let Century Management Solutions get you to your next medical appointment. They specialize in non-emergency medical transportation, connecting patients to care, safety, reliability, and on time. Their advanced technology platform seamlessly coordinates patients, healthcare providers, insurers, and transportation partners all in one powerful network. With over 200 trusted transportation providers, they deliver scalable solutions backed by real-time tracking and complete transparency. Go to SENTRYMS.com. The Larry Kudlow Show on the Red Apple Podcast Network.
Okay, hour 3, we're going to look at the stock market as we always do. By the way, you can hear us over the internet, live stream us, LarryKudlowShow.com, LarryKudlowShow.com, if that makes your day better, if you can hear us any better. And a quick plug for the TV show, Fabulous Fox Business Network, FBN. Name of the show is Kudlow. Every day, Monday through Friday, 4 to 5 p.m., 4 to 5 p.m. Come and join us. And if you can't make it for some reason, just text your favorite 9-year-old, and she will show you how to DVR the show. Okay, and get it. Now this stock market story is, I don't know. Here we go again. We have tremendous jobs numbers, right? The economy is booming. Profits are booming, right? Everything looks good. American business, it's all good. And then the market cracks up yesterday. Just had a big, maybe it was an overdue correction. I don't know. I'm not smart enough to know. We got Jeff Kilburg, CEO of KKM Financial. It's going to help us. We got Jon Najarian, co-founder of Market Rebellion, who's going to help us. Gentlemen, it's the old, I guess it's the old song. If the people are acculturated to believing, financial market people, investors, if the economy is strong, somehow that's going to be inflationary and interest rates have to go up and the Federal Reserve has to tighten interest rates and the media plays into this. And so let me just see the extent. The correction yesterday was 695 on the Dow, 1,122 on the Nas, 201 on the S&P. But I will say, Jeff, before you dive in, I just want to note, and I said this earlier in the show today, year to date, okay, let's use that, you still have big gains. The Dow's up 6%, the Nas is up 11%, 10.6%. The S&P 500 is up 7.9%. The smaller caps, the S&P 400 is up 11.8%. The S&P 600, the smallest, is up 16.1%. And year on year, for heaven's sakes, Dow's up 20%, Nas is up 33%, and the S&P 500 is up 24%. So that's the context. That's the context. All right, Jeff, fire away. Go ahead.
And you're absolutely right, Larry. We're only down 3% off the all-time highs in the S&P 500. So I think what yesterday was true profit taking. You saw the market rally. Remember, just in March when we had the Iranian war, we saw the S&P 500 and the NASDAQ 100 go into a 10% correction. We had a parabolic rally. A lot of people got scared. A lot of the bears got excited. But then we realized how great earnings were. We had a gangbuster earnings season. We saw the market move higher. Now, semiconductors led that charge. Semiconductors, the ETF SOXX, yes, it was down 10% yesterday, Larry, but still up 80% year to date. So when we look at the emotion, we saw the VIX, and I know Dr. J will talk more about the options market, but we saw the VIX jump 40% yesterday, but it came from 15. So I think we have to really take this in context. There's a lot of emotion in the marketplace, but we are still in a very good spot. The AI theme, we are not walking away from it, but you see traders, you see investors with all the movement. We had Google do a secondary $85 billion offering this week, bigger than SpaceX IPO, which is just next week around the corner as well. So there's a lot to digest. But when you see a parabolic move like this, It is healthy to see this reset. However, we just live in a very exaggerated, amplified, and maybe it's the zero-dated trading options that we see that amplify these moves. But we are in a good spot. I think I'm still cautiously optimistic because at the end of the day, I look at earnings, the profits, mother's milk, right, Larry?
Yes.
That is the guiding light.
Yes.
And they are so strong.
Yes. Yeah, 100%. So before we get to John, your point, you're not running away from it. That's what you're saying, Jeff Kilburg. You're not running away from it.
Absolutely not.
All right. Now, John, inside the market, I know what you're going to talk about. The VIX. Well, the VIX is up to 22. I guess it was down 14, 15. So that thing jumped up, but that's not the worst thing I've ever seen. I mean, what happened? Traders see these job numbers. What, and they panic? Too many people working? Americans are working, and I got to sell my stocks? Help me out here.
Yeah, you are correct, and Jeff is, as always, spot on. We have the SpaceX in front of us next Friday, and that's when the stock will trade. We don't know if it'll trade at 10 in the morning, 11 in the morning, or when it finally trades, but we know that they're going to bring it out at roughly $135 a share, and that's after the 1-for-5 split, and pre-market, but before it trades. And I think that what happened yesterday was, as again, you and Jeff have been talking about, the move was so big in the semiconductor stocks. What do people tap when they need money to go into something like SpaceX? Even if that money isn't going directly into SpaceX, a lot of people anticipate what's going to happen in the market because that's what the market is. It's a future projection. And I think a lot of people really didn't get scared, but they said, you know what? I'm up 80% on some of these semiconductor stocks. I'm going to pull money off the table because I'm anticipating somebody else who's going into SpaceX is going to be pulling money out of the market next week. So obviously, in my mind anyway, they started pulling money out ahead of it, even if those same big hedge funds that were liquidating in the chip stocks yesterday, even if they're not going to put that money directly into SpaceX. Nonetheless, they're anticipating that a lot of money will be pulled out of the markets to go into SpaceX. So they're just saying, what should I hit first? Well, I'd say data centers, AI, and chip stocks. That's what I would sell. I was not selling yesterday. Did my account go down? Yes, it did. However, I think that's a very temporary move that'll be over. If not Monday, it'll be over by Tuesday. And then people will be, again, that FOMO, that fear of missing out, will be carrying the market higher with the SpaceX IPO.
John, just give me another couple of paragraphs for our listeners, particularly on SpaceX. Now, this is Elon's thing, right?
Yep.
All right. So what do we got going here?
Yep. It's XAI. It is the satellite company that he calls Starlink, all wrapped up into this. And at some point, and he's even discussed this publicly recently, there might be a possibility that he tries to roll Tesla into this, and the Boring Company, and many of these others. But for right now, I saw, Larry, that Google just signed a $900+ million a month contract with Elon for data centers.
Wow.
So, yeah, and that's public knowledge. I'm not disclosing something that I shouldn't. But another $900 billion. So in other words, another basically 12, call it close to $12 billion a year on top of the $18 billion that they declared in their S1. So this company is going to be rocking and rolling, and people are going to chase it. That's what I think is going on, Larry.
And Doc, they just did the Anthropic deal. SpaceX sold another $1.25 billion of compute per month to Anthropic. That was probably despite Sam Altman over at OpenAI. But yeah, they are reading the register at SpaceX before they even brought it out.
Wait, what do you say? Jeff, wait, who sold Anthropic?
So just like Dr. J was saying that Google is investing $925 million a month to buy compute from SpaceX. 2-3 weeks ago, SpaceX also announced, public knowledge, that they are selling $1.25 billion a month of revenue to extra compute up in outer space to Anthropic. And that reason is because probably Elon Musk lost the lawsuit against Sam Altman, against OpenAI. But nonetheless, you're seeing SpaceX continue to sell compute because that's the bottleneck, Larry. No one can get enough compute. Look at Andy Jassy over at Amazon. He can't spend enough CapEx because he's already matched the ROI. And he publicly stated that the more we spend at Amazon, the more we're going to make. So it's remarkable to see it's a lack of compute, a lack of getting that. And that's where Elon and SpaceX will probably serve that void.
Well, I think personally, by the way, one of the, I've been in the TV and radio hosting business for a very long time. Okay, coming up to 25 years. One of my highlights, fellas, was a little more than a year ago. It was last March of 2025. I interviewed Elon. Okay, just sitting right across from him for 20.
It was a fabulous interview.
Well, you're very, very kind. In the Indian Treaty Room in the old executive office building in the White House complex, and we were sitting on high chairs, those awful beach chairs, which are so uncomfortable, for 25 minutes. And I got to tell you, it was one of the highlights of my career, honestly. I mean, and let me say also, you fellas know a lot more about this than I do. I try to follow it a little bit. But Elon Musk is a genius. Okay, now I dealt with him in the White House in the first term, but he's a genius, and I would not bet against him. Okay, full stop. I would not bet against him.
No one who's smart would bet against him. And will SpaceX go straight up? No, it won't go parabolic. But could it over the next several years? I mean, Larry, right now I'm at F1 over in Monaco. Everybody over here is asking me, number one, about SpaceX, and number two, they're saying, well, John, we can't get data centers over here in Europe. It takes multiple years of permitting and all the rest to get them. Well, that's why all these miners like Hut 8, like Z Squared, ZSQR, and I'm involved in both of those companies. I'm not in the management, but I'm involved with those, and I own them. I think that people are trying to jump ahead of the permitting and the power that it would take for them to be able to participate in these big data centers. And in Europe, it can't be done. It's going to be 5-6 years for these guys to catch up. And that's why anybody who's got compute and power in the U.S., they can leapfrog over that permitting process and get these things up and running faster in the U.S.
And just before we take a break, this is so interesting, by the way. Thank you for all this, gentlemen. But Jeff Kilburg, I read and hear people say, well, all this capital investment that's happening by all of these companies, okay, by the AI companies, by the chip companies, by the et cetera, even the software companies, it's too much investment, quote unquote. It won't be put to work, quote unquote. I just think that's economic nonsense. Of course it's going to be put to work. What did Jon just say? We're the world leader in this, and we need to be the leaders in data centers, and we need to be the leaders in all manner of the development of AI. We want to beat China. And Europe is, in the rearview mirror. Of course it's going to be put to work, and it wind up put to work profitably.
And that's a brilliant point you bring up, Larry. And I think back in 2024, even 2025, it was speculative. It was speculative in nature to see how much money these companies were spending on their capital expenditure, better known as CapEx. But now, in last quarter, the earnings report for last quarter, which, by the way, was 27.7% year-over-year growth. That blew the doors off of expectations, which was high at 13%. And to put it in context, Larry, the average year-over-year growth for earnings per share is 8.4%. So we're 3-4 times better than that. And why is that? It's to your point that it's no longer speculative what they spend. It's realized revenue. It's real profits. And Andy Jassy at Amazon articulated that 3 months ago. So that's where I get fired up. I'm cautiously optimistic. And I go back to Coach Holtz back in the day. Coach Holtz always told us never to flinch. Now is not the time to flinch. One down day does not provide an opportunity to flinch.
Boy, do we miss him. And boy, did I love him, just as an aside. Fellas, we got to take a quick break. Jeff Kilburg, CEO of KKM Financial. Jon Najarian, co-founder of Market Rebellion. You guys are fabulous. We're coming right back, folks.
One summer moment can change a child's life. Through Toys for Tots Give and Go initiative, your support provides books, games, toys, and outdoor adventures that spark curiosity, creativity, and a love of nature. Whether it's fishing, learning a new sport, reading under a tree, or playing with friends, these moments build confidence and lifelong memories. For too many children, those moments never come. You can help change that this summer. Visit toysfortots.org. Toys for Tots, delivering hope beyond the holidays.
So we're talking about the stock market correction with truly two of the best, Jeff Kilburg, CEO of KKM Financial, and Jon Najarian, who was the co-founder of Market Rebellion. Interestingly, Jeff, all right, so bond rates went up yesterday. I don't know, 8-10 basis points. The 10-year is 453, according to this sheet. I wouldn't exactly say we're exploding into double-digit interest rates here, for heaven's sakes. And one other editorial point, my view, Kevin Warsh, the new Fed chairman, does not believe that strong jobs and growth causes inflation. All right, he's going to change. It'll take him time, I grant you that. But his influence on Federal Reserve thinking, he does not believe that. Inflation is caused by too much money chasing too few goods. He's not going to jump to raise rates just because more people are working or the economy is doing well. It's going to be a different Fed. And I think, investors perhaps don't understand that yet, but they will. They should not panic over this, higher interest rate argument. The Fed's not going to raise rates.
Agreed, Larry. And I think that was a premature reaction to a very strong jobs report on Friday. And a lot of the investors said there's no more interest rate cuts coming in 2026. There's actually going to be an interest rate hike. I don't believe in that narrative. I think Kevin Warsh is going to be pragmatic. He has some inflationary data coming up. I don't think inflation is going to be hot by any means. It continues to come lower. But what's fascinating is that at the end of 2026, we are going to see Kevin Warsh get under his feet and have the ability to lower rates. He did not come into the office to raise rates. He'll find other ways, I believe, to tighten the balance sheet and bring rates down. But the 10-year, the good news is it's a tail when it's coming down. Crude oil cracked under $90. If that gets under $80, that's the all clear to get us out of Iran. But there are some tailwinds coming here once we kind of digest all these massive IPOs in the month of June.
Jon Najarian, just in the last minute, the innards of the market, the technical aspects of the market, how do they look to you?
Well, again, Jeff did a great job describing the earnings, the mother's milk, as you like to say, Larry. Mm-hmm. And it truly is. When you're looking at the S&P 500 companies and you're seeing estimates like 24% earnings growth, that's virtually unheard of. Yeah. But we're seeing it. We're seeing them beat every single stock that has put up numbers, has beaten, and it's in the high 80 percentile of those stocks that are reporting. I think that continues, Larry. And again, that means that if you want to fight against this market, you're on the wrong side.
All right. Jeff Kilburg, thank you. Jon Najarian, thank you. Terrific stuff, folks. We're going to do some money in politics on the other side.
Thanks for listening to The Larry Kudlow Show. You can hear The Larry Kudlow Show Saturday mornings at 10. If you like the podcast, share it with your friends and listen anytime at WABCRadio.com and download the WABC Radio app. Hit that subscribe button on all major podcast platforms. Plus, follow WABC on social on Instagram, TikTok, Facebook, and X. See you next time for a new episode so you never have to wonder.
What the heck is going on here? Amonte's Key Food, proudly serving communities throughout Brooklyn, Queens, and Long Island for over 30 years. When you shop Key Food, you'll always find fresh products, great weekly specials, and exceptional personalized service. Visit at any of their Key Food stores at 8235 153rd Avenue, Lindenwood, New York, 935 Rosedale Road, Valley Stream, New York, and 6620 Avenue U, Brooklyn, New York.